Let me tell you something that most new business owners never really fully understand. This car, there's a lot of tax implications to this that I never fully understood when I took this on. I did a Facebook post about this and it got over 1 million views and many comments from many established business owners, a lot of negative Nancy's, but I think it was a very valued piece of advice because of the amount of comments that I got, which has led me to make a YouTube video to reach a wider audience, because maybe if I come across this video back when I was looking to take on this car, then I absolutely would have not taken on this car. ChatGPT didn't exist when I was taking it on. I thought I did the research, I just could not find the exact information I was looking for. HMRC did not make it clear to me, or maybe that was just me. Lack of business experience, I don't know. But this car, I thought the costs were, yes, benefit in kind on the company, such as the Class 1A tax and the benefit in kind that the company has to pay. What I didn't understand is it nearly added £25,000 to my taxable personal income without ever actually receiving that money. And that one decision, that stupid ego decision, triggered a chain reaction which was costing me £38,000 a year. So if you're a director and you're thinking about putting a car through your business, then watch this video, because this mistake is far more common than people admit. So let me give you the story, because at the time I thought my business was doing exceptionally well. I was hitting big months. I was making 40,000 profit in 1 month. Thought it was a big cheese. Thought I'd made it. Confidence was sky high. The cash flow was great. It felt strong, it felt stable. I was about to make what I thought was a sensible business decision. I was researching everything: commercial vehicles, electric vehicles, hybrid, all of the classes and how they'd affect the business owner. And in the end, I leased a high-end vehicle through the business. Everything fully above board, nothing dodgy, accountant involved. And don't get me wrong, this video isn't about blaming HMRC. It's not about blaming my accountant. And it's not even about saying don't buy nice things. This is about how the tax system actually works. Because if you don't fully understand, and obviously I didn't, they punish the hell out of you. So the mistake was not the car. The mistake was not modeling the tax consequences properly before doing it. So I looked at the lease cost plus VAT, the fuel, the insurance, the monthly cost, and I looked at the fact the business could afford it. What I didn't properly respect was the benefit in kind. And this is where I think the post went viral, is because this is misunderstood. This is worth admitting my mistake, where I got it wrong. So honestly, this is a bit I didn't fully understand, or I thought I did at the time, otherwise I would not have taken that car. So benefit in kind, right. So HMRC doesn't care what the lease costs. That's a business expense, done. They do not care about what the car costs the business per month. What they do care about is that car available for personal use. This is where a lot of people get caught out. HMRC will treat it as a personal benefit. Then they calculate a theoretical value based on the benefits, such as the list price of the car, its CO2 emissions, and your personal tax band. Then that number gets added to your personal income. And in my case, it was 24,629. You don't get that. That's not something you get, obviously. That just gets added like you were paid it. That is the crucial part a lot of people don't get. So in my case, the benefit in kind was nearly £25,000. So just like that, overnight, HMRC say, yeah, cool, that's a nice car. Benefit in kind for you to drive it personally. You know, we're gonna add this £24,629 to your personal taxable income, just like that. And that is the bit that most people struggle to understand. So that fake income does some real damage. So let me explain. Because once it's added, you obviously need money to live. It depends. My lifestyle, you know, I pay myself 13,200 within that 12 months in a salary. Then I've got that 24,629 added to that. So straight away, I'm at 37,829. Then I took 46,000 in dividends for our lifestyle. So total income received was £83,829. So that pushed me straight into the higher tax bracket. So take away the 12,570 personal allowance. So straight away, my total income on which tax is due is 71,000. So now I'm in the higher tax band. Now that increases my personal tax bill. It also triggers payments on accounts for next year to be extremely higher, which I'll explain shortly. And obviously it will reduce the flexibility for next year as well. So you're not just paying once, you're paying income tax on the benefit in kind, Class 1A national insurance, and higher advance payments for next year, all for money you never received, all because I wanted to drive this fancy car. So people were saying, you know, I've already paid Class 1A national insurance contribution, why am I paying again? That's a good question, so let me clear it up. The business pays on that benefit. You personally still pay income tax on that benefit. Two different taxes, the same car, the same benefit. HMRC double dip. They double dip on you legally. So the lease and the insurance, yeah, they're legitimate business expenses, but that does not remove the personal tax charge. You could buy a 20-year-old Audi A4 estate and buy that through your business, but you're taxed. The benefit in kind, the personal benefit in kind, the value of the car of when it was new is how they do their calculation. Regardless if you go and buy a 15-year-old car, HMRC would be like, okay, how much was that car? What was the list price when that was new? What's the CO2 emissions? And then they'll work out your benefit in kind based on that. And that might be 10 grand, but the car might only be worth £3,000. So what happened in reality was this. We've got the business side. We've got the lease payments, we've got the insurance, we've got the fuel, we've got the VAT, and we've got the Class 1A national insurance contribution. Then we've got the personal side. We've got the income tax on 24,650 of fake income. We've got higher rate tax exposure. We've got higher payment on accounts. So the car didn't destroy me, it didn't destroy my business, it just made me very inefficient from every single angle. So look at this, right? The payments on accounts, which were due this January, 4,000. So straight away, that's just added 4,000 to my personal tax. That has to be paid from your personal account in January because of that car. Tax that is due next year. And I'm no accountant. This isn't advice. This is what I found out. I found out payments on accounts are optional, and you talk to ChatGPT to find out all about it. And it will even give you your email to send to your accountant to either justify removing them or reduce them. But I had mine reduced to £1,000 because my income for this year is lower because of the car, because I got rid of it. It's no longer on the books. So yeah, there was a lot of people in the comment section saying, you know, what if can't you just say to HMRC this is business only? This car is for business only purposes. So HMRC don't care if you've got another car that is allocated for personal use. If they're both sat on the driveway, then you can, even if you don't, you can use it for personal use. So unless it's genuinely unavailable for personal use, such as locked, restricted, and evidence, it will have benefit in kind attached to it. A lot of people will say, sack your accountant. I'm very much one to blame myself for absolutely everything. I thought I'd done all of the research I could do. I did have a conversation with my accountant. This was me mistaking a sustainable business for a few good, excellent months to then go and lease a top of the range 110 Defender on a 4-year lease. So I fully take on this mistake. I would always go down the route, and I have gone down that route, of get a personal car and invoice your business for the mileage. You can definitely do it, right? Just don't do it the way I did, unless you're a millionaire and the cost of getting the car is insignificant. Then by all means, you've made it, congratulations. But the alternatives is getting an electric vehicle with low benefit in kind, but there still will be attached to benefit in kind. Get a commercial vehicle that is a complete tax write-off, as in you can run everything through your business. But I believe they have changed it, so trucks are now classed as cars. Cheers HMRC. Oh, we've noticed most businesses have like those crew cab trucks, so we should tax them. Or simply don't run a vehicle through your business. There are definitely efficient ways to do it. This just was not one of them. So this is fully my problem. This was a confidence problem. This was ego making a decision. HMRC would definitely punish your confidence if you don't plan. And if this video saves one business owner from making the same assumption I did, then it's worth every uncomfortable comment. Now, I'm not anti-success, I'm not anti-buying nice things, doing nice things, running nice things through your business. I'm anti-making expensive decisions without fully understanding the tax consequences now. So if you're in business and you're a director and your business is less than 2 years old, slow down, model it properly, and don't confuse business cash flow with personal tax efficiency, because that's how this car come to cost me 38,000 per year. I hope this helps.